Welcome to Business Talk, your go-to source for all things business and finance, only on businesstech.co. We've just reached a milestone, 2.5 million viewers. So thank you for tuning in and helping us do what we love doing. And that's talking to the experts about a range of issues. And today we're going to be talking about how you build a nest egg, because let's face it, due to the rising cost of living, we've just had another massive petrol price increase and just general inflation. Most South Africans are finding it really tough out there right now. And we know inflation erodes the real value of our assets. Many are battling to save and invest to build that financial resilience. But you have to start planting that acorn now, or you'll never enjoy the shade it provides during the rain or the heat wave in future. We've got a very distinguished guest with us, a market veteran with over 2 decades of experience in the stockbroking industry. She's not only a qualified CA, but is a member of the South African Institute of Stockbrokers since 2000, the head of securities at PSG Wealth, Wendy Myers. Wendy, welcome, and great to have you on Business Talk.
Thank you. Thank you for inviting me.
It's a great pleasure. Growing a meaningful nest egg. It's an interesting word, that nest egg. It's a necessary step towards achieving our financial goals and ensuring that you can enjoy your retirement years and you're not living from hand to mouth every month. But what do we mean? What should investors be mindful of when growing a meaningful nest egg?
Well, I think for me, the key word that stands out when I think of building a nest egg is passive income. And really what we set out to achieve while we actively working is building towards a retirement where actually our income meets our living requirements, our lifestyle requirements, our health requirements. And I think a lot of investors think that investing is for the wealthy. They think that, I need to have a large amount to invest and then I can start my means of investing towards retirement. But really what people need to understand is that it's time in the market and time is a key factor to consider when building wealth. It's not about that initial amount of investing. And I think that if investors start now, then they can really reap the benefits for the longer term. And this is where I want to talk about how securities can actively contribute to building that nest egg that meets your passive income needs, because this is the single class that's consistently beat inflation over the long term when compared to any other asset class.
Yeah. And I think often, that's such an important point. Investors are put off because they think you need this huge sum of money to begin the journey. And it's like they say, every river begins with a single drop, and you've got to do it consistently, drop by drop. And I also think many investors base their decisions on emotions. They hear a rumor at the braai or the dinner table, they're going to chase the next hot trend, and they often end up losing money as a result. But despite the setbacks, they might continue with the same behavior. So can you just elaborate on some of the strategies and considerations investors should keep in mind when it comes to investing in stocks?
Yeah, well, I think you've hit the nail on the head. I think investors, when they think securities, they often think of, well, I need to buy at a low price and I need to quickly sell out when it's gone up by 12%, which is very much short-term thinking. Certainly at PSG, we advocate investing for the long term. But another consideration when investing in equities or securities, it's not really around those capital gains that can be enjoyed. It's also around making sure that your portfolio of assets has exposure to dividend income stocks. So that is where the passive contribution comes to your portfolio returns. I think investors, what they need to consider when investing is saying to themselves, I need to be invested for the long term. I want to enjoy capital gains. But at the same time, that dividend income is what's going to provide my income for me at retirement. And it also allows me the opportunity when that income has credited to my account to buy further equities or securities so that I can compound my impact of my investment returns.
And that's, an often overlooked fact about investing is that passive dividend income. If you just look at REITs, for example, they legislated in a way that they have to pay out a certain percentage of their earnings. And yes, I know REITs, we can go into a rabbit hole there about what's happened and whether we see valuations as attractive right now. But I suppose that comes to my next point, and you mentioned it, timing. I think is often a critical factor in investing. But
Yes,
Warren Buffett
absolutely.
once said that the only value of stock forecasters is to make fortune tellers look good. And because the short direction terms of the short-term direction of stock prices is just random. So
Correct.
when is the optimal time to invest then in securities? Are there
Well,
specific conditions that market participants should be looking for?
yeah, look, I would always say start now, start investing now in securities. But I think that, I think it's important for investors to understand there's definitely a correlation between interest rates and the price of equities. So, where interest rates are at a peak, and we believe certainly in South Africa and overseas, we believe we're nearing the top of the interest rate cycle. And the price of equities has an inverse relationship to interest rates. So where interest rates peak, so the price of equities typically tends to come down. And I would say this is probably the best time to start investing. But don't let these cycles stop you from taking action. So I think the key thing is there's never a good time. There's always a good time to start, and that's now. Try not to time the market too much, but if I had to guide you, probably the best time is when interest rates are high and equity prices are lower.
Yeah, and as you say, cyclically, I think we probably are right at that top or that peak point. Another important component of investing in securities is diversification, a very key principle for successful investing. What are the types of retirement products available that investors can make use of to gain increased exposure to shares, firstly?
Well, I think there's a multitude of options available. Before I give you the various options that I certainly am affair with, I really want to encourage investors to make sure that they talk to their financial advisor, because each of these options have different advantages. Some have liquidity considerations, some are taxed differently. So if you are battling to understand what's right for you in the context of your holistic requirements, I really would encourage you to talk to a financial advisor. But if I had to talk to the key products that I certainly would advocate as a way of getting exposure to retirement products. So I think retirement annuities, preservation funds or living annuities, those are your kind of typical investment or retirement investments or retirement wrappers that give you exposure to shares. In addition to that, obviously endowments, and these are long-term saving accounts that can be used really for estate planning. But then if you go past the sort of retirement products, even if you want to start investing now without really considering an actual specific retirement product, open a basic investment account with your stockbroker, and this allows you to invest in your own name, and you can hold the shares directly. That's either for a local portfolio or an offshore portfolio. And these type of accounts allow you to invest not just in shares, but also in exchange traded funds, which, as we all know, are effectively listed unit trusts. And then if you want to have exposure to securities via a unit trust investment, then look at investment platforms. PSG has a platform that allows you to invest in unit trusts, which is also another great way of getting exposure to the underlying, which is securities.
Yeah, and that retirement annuity, as we know, is it's got great tax advantages, but there is legislation in the pipeline that is going to, in future, allow us to access some of that in a two-pot system. And I think that's going to make those a lot more attractive to the broader market that sometimes just feel a little bit uncomfortable with all their money being locked in. But that's basically what it's for. It's for retirement. You shouldn't be
It's
dipping
for
into
retirement.
it. But I do think it'll help from a behavioral perspective. Last question. How does all of this factor into building a robust investment portfolio? Is it just a question of building things that are uncorrelated and that, can perform well in certain market conditions while others are struggling? Just talk to me about how diversification seeks to at least smooth the ride for investors.
Well, I think, diversification goes across many, many risks. There's the ability to have exposure to offshore, which gives you some kind of rand hedge, and invest in hard currency. You might want to have exposure across different sectors. So you might not want to have too much exposure to commodities, which are extremely cyclical. You might want to have more exposure to dividend income or value stocks as opposed to some of these growth stocks, which tend to have higher capital gain but less dividend income. So it can be quite complex, Michael. I must be honest with you. So I think if you want to start out, I really would encourage you to get advice from a financial advisor. They are skilled and professional in guiding you along your investment journey. And I think it's important to note that you need to be able to understand what do you need to invest now to make sure that your retirement is an enjoyable time, and a time where you're not dependent on children. You're able to enjoy the fruits of your labor. And, the need to diversify will ensure you achieve those goals, assuming you start investing now.
Yeah, exactly. And that's the important point. Stop the paralysis. And I think there's
Correct.
too much of that, almost overwhelmed sometimes by choice. And that's why the financial advisor is a great place to start. Wendy Myers, thank you very much, Head of Securities at PSG Wealth, for sharing why investing in securities is so important if you want to add to your family's nest egg here on Business Talk. Take care.
Thank you.